Hello guys, glad to have you on board again. Today, we're Tuesday, so we're taking care of an intraday forecast. Just the same old usual stuff, repetitive stuff, of course, trying to figure out where the interesting areas on intraday basis will be, and we decided to take care of the SPX as an asset, recurrent asset. We're always going to take care of this one. So you see the pattern setting itself day after day, or most likely week after week, because we take care of this once a week on every Tuesdays. So the first thing first, we have a quick look at the Asian sessions, just seeing if something important has been setting in place, setting in motion or not. In here, I don't nearly even see something really important in there, so I would say kind of a random session for the Asian markets. We could have a look at them. We should actually. So as you can see, pretty random, at least not that big of a deal. Kind of hesitating in here and could be setting itself for a triangle. You can clearly see the triangle kind of maturing, or we're going to break this area to an ABC correction. We can see there is a big open gap on the Nikkei. Same thing as well for the Shanghai Composite. So there is a lot of open gaps kind of attracting prices for some retracements, even though we can clearly see that those kinds of structures are very massive strength in terms of reversal. So we do have some double gang in terms of global vision for the swings, even though we're just going to do, we don't really care about swings in there, right? All we're going to do is that we're near support areas. It is hard to say if we're going to have deep retracement to go back to those gapping areas and closing them, or if we're just going to range before accelerating. Just for the reminder, those gaps, when they happen in the late stage trends, like remember what we said, we're late stage trending, and this is probably the final wave that we're going to have in the daily charts to the downside. And if that's the final wave, then there is somehow a trend in them that we rarely get to close those gaps. They're here, they're freaking big, open, but as this is the probable last move, last consolidation move from indexes, and most likely Chinese as ones, then generally we let them open because we're going to close them whenever we reactivate. So there is no rush to close those gaps. At least, I would say not in Shanghai. But still, we got a pretty different picture when it comes out. The SPX, in here we're trading a fucking historical high, so we're pretty late. We're not in the same stage. We're not late stage trending. We could be early trending in the US. So the gap we have in here in the US stock market definitely is going to be closed. All right, we've got an upward gap in this area, but this one isn't an open gap. It's just that we closed at the high of the session, and the day after we reopened at the lows and sold. So this is not the kind of gap that we need to fill, because this is not an open price gap. All right, just let me figure out one. All right, this is open price gap. All right, meaning this area hasn't been tested one day to another. So this is definitely the kind of things that we get to retrace up to. So like this one, all right, this is an open gap. This isn't. This is just a random usual gap in which we wrong foot the bulls. So there's no big deal when you don't necessarily need to get there for the SPX. All right, but still, this gap, we're going to note the price, it's 28.51, 52, so we need to assess this one. Then we just look at the cash structure, figuring out if we are into some interesting price area in the daily chart. All right, what we got in here is that we're trading exactly at 23.6 Fibonacci retracement. We've got the support for the trend channels, support areas, so dynamic support and horizontal support in this area. So we've got support, definitely. The thing is that this level has been tested already, and the first time we got there, I definitely decided to profit take, partial profit take on my bearish entries, which means I've been buying or rebuying myself partially. So definitely been supporting this area, but still we're back in here another time. So obviously the second time gets a weakened support in this area. That doesn't mean it's not going to work out. It could be a double bottom structure, obviously, but I don't think it is. So what we do is that we need to understand that we've got a strong reversal in here with strong bearish signals, and we reintegrated and broke through the context. Okay, we were trading inside the daily context, and now we've reversed and we made multiple closes below. Not like the last time we did. We tried and bam, the bulls just bought ourselves out. So now they're not doing it. The bulls are very less likely going to support this area, but still we got to work it out. So we got a range in here, and that's exactly what we need to figure out. The context we have in the daily chart right now has absolutely no bias. We're neither bullish or bearish. We're just kind of hesitating upon support area. So as close we get to the support, we try to support prices. Anytime we get to reach out to the major resistances, this area, we're going to look out for selling entries. So the answer we want to, the question we want to answer in here, the first question when you do intraday trades is the daily chart having a bias? Do you need to massively favor buying entries or selling entries? In here, the answer is no one. We can either buy or sell. We're just going to make sure that we sell high and buy low, obviously. All right? So now the next thing we do is that we get to the futures market. All right? Like we said, we've got a gap at 28.52, so we're going to just note down this gap. All right, so this is where we've got the gapping area. What the fuck is that? So, all right, I'm going to use the key level and just put the name. So it is gap level. All right, so that's the first thing we need to do. I'm going to show text, and I'm going to put, what the fuck? All right, I would like to have a straight line. All right, there we got it. All right, so this is the gap closing level. So these are the information we gathered from the daily chart, right? That does not need it anymore. I think we're going to put those ones later. These are alerts I've been putting late stage last week. So anyway, that's what we've got. All right, yesterday was a holiday in the US, so no trading yesterday, but still the Europeans basically done nothing, waiting for you guys to get back in the market. So anyway, this is what we've got, all right, the 1 hour chart context. So first question you might wonder yourself, is there some big catalyst, stuff like that? And what is the daily overall context? Do we need to favor buying or selling? Are we trending, or are we just neutral area? So we answered this question, we're neutral. The other question is, what do we have to deal with today in the economic calendar? So we've got a couple news. It's not really the big of a deal. So we've got a consumer's confidence in the euro area in a few minutes, but that's it. That's all we've got. Okay, so it's no big deal today to take care of big market catalysts. So nothing really will be bothering us in the intraday session. All right, so we answered the first two questions. What is the overall context, the Asian session? Are there gaps? We need to favor any kind of inflows or outflows from the daily charts. And then we get to make simple question number 2, which is what's the context in the 1 hour chart time frame? Just to make sure that we set ground rules and big boundaries in this intraday session. The 1 hour context will be our boundaries. So in here we've got a strong boundary starting in here. So this is where we've got the first resistant context. So whenever we get in here, forbidden to buy any fucking thing. No buying in here. It's only selling. All right. So in here is going to be our intraday selling area. I'm just going to delete those previous stuff. As you can see, it's been working just fine. All right, precisely, bam. All right. So the last available signal we had is definitely this one. All right. What is this kind of context? We're going to answer this question right after. Let me just put the blue stuff in here. All right. So these are the areas in which we're totally forbidden to try any fucking thing but breakout trades. Sorry, it supports. So these is in here the only bearish trades we can take are breakout context, but the breakouts are really, you need to respect the breakout strategy. Remember what the breakout rules are, right? So in here same thing as well. The only bullish trades you can take in here are bullish breakups, but rarely going to happen. All right, so this is the neutral area. As close as we get to the selling area, we favor selling signals, and then obviously the opposite in here. Then next question, what is this kind of context? So simple stuff as usual, still the same rules. You need to figure out what this is. Does that look like a trend? No, it's probably a range. So let's figure out the range maturity. 1. All right. First bearish movement, terminating in what the freaking fuck? Sorry. So first range boundary, context, resistant context, back to support context. So we're third boundary in this range. So the range is still immature. So we still have some ranging action to perform. This is normally third boundaries on the range, which means normally everyone can take this one, beginners included. They just need to make sure they respect their own rules. Remember that experienced trader can trade up to 61% retracement in a range. Beginners have to wait for 76%. So we definitely are fitting the plan in here. Everyone could have taken this. We had signals, all right? So we got signals, outside of context, everything you needed, blue triangle. So definitely in here, everyone could take this trade. That's exactly what we needed, all right? So that's the last available trade. As we said, it's the third boundaries in a range. We're expecting probably 4 and 5. What structure does this look like? I can very well see that at the moment, we've got 1 and 3 almost aligned to a horizontal straight line. The thing is that we can see the underlying structure as well. For those who are doing Elliott waves, we can clearly see that this is 2 sets of waves every time. So I suspect we've got a second set of wave coming along the way today. All right, and probably another set of 2 waves to the downside afterwards, following on 2 final waves, which leaves us with a possible barrier triangle structure. Normally these structures are broken to the downside, but still we're pretty fucking immature at the moment. So that doesn't mean it's going to look like that. It's just this is the plan I'll favor. This is a range, so don't be too aggressive. Don't try to anticipate the range structure. Just this is what it looks like to me at the current stage. Therefore, what I'm going to apply in here is the usual standard stuff. All right. So those who've been taking this by entry, you know what to do. Normally in a range, you always apply the same strategy. Anytime we get to cross 50% of the context channel, you consider this trade as being validated, and you'll put your target one at 61% retracement and or 76.4. All right, simple as that. But you profit take in this area no matter what. So we're still failing to validate. I think it's going to come later today. And whenever we validate, you don't forget to profit take in those areas. All right. So that will be my plan today, following up on the previous signals. Those signals we're saying we're probably going to target a second bullish impulse right to the targets for those who've been buying the lows. And then those who want to sell the range will be able to do it in this area as well. So today's selling area, normally in the context, I would say in order to sell, I'll favor probably the 28, 76, 77 area, close to the 76% fib, but still the experienced trader maybe start selling right at profit taking number 1. All right, so I would say this is the low risk selling area today. This is only for experienced trader who can start looking at intraday signals right from 61% fib. All right. So that's how we adjust this stuff. Okay. Normally, I wouldn't take any buy entry in here for a simple reason. Remember that this is what we've got. Last time we've been failing out of the trend channel, which means, remember what that pattern is? Context, trend channel. If we get back to context, we could have a bearish breakdown. So no buying options today. You should be a buyer, or you're going to buy shorter time frames, but in a 1 hour context, you don't buy a goddamn thing. So there is no support today. We don't go there. If we go there, it's a breakdown. All right? I need you to understand that. All right? So only today is either you got this signal or you're going to buy some more retracement today in shorter time frames, but we target the retracements and we sell this area. That's how we're going to do. All right? So we've got the plan. We've got the intraday plan. We've got the gap level to fill. We've got the targets for those who've been taking the 1 hour chart buying entries. So we know where the action is going to take place today. That's really how it matters. Now we get to the intraday chart time frame, 15 minutes and 3 minutes. These are the times when we're going to trade upon, and this is where we're going to set ourselves the final measures and the final alerts and stuff that we're going to care about. All right? So the context we figured out is going to be a range. All right? So what we care about is where the actual range boundaries will be, so the 15-minute context. So this is what we've got. We're trading exactly in the middle. It's pretty fucking interesting at the moment. And what we've done in here, same stuff. We have another range boundary, first cross. We're expecting another one to set itself pretty closely if we ever get back to support context. So we destroyed the 1 hour support area, but we do have a 15-minute support in this area, probably going to lead us to a fourth point later today, right into the expected target area. So what's the plan today? That's it. We got it. We've got our plan. Let's put it in motion. It's exactly this. We've got a little support in here, but it requires a 15-minute signal in this area. If we ever get there, we're going to probably find some support. All right. Normally, you're supposed to wait for at least 50%. All right. So this will be the area of support today. We're getting here, 15-minute signal. You take it if you want it. The target is, for those who don't have this trade, you can take a little trade in here, try and target the selling area, and that's it for today. We're probably going to do no more than that. If we ever manage to get to this target area before the end of the day, that will be more than enough. All right, so try supporting price in here. Don't forget to profit take in this area. There's obviously a stop loss out of the current lows. If we were ever going to break them down, then you're definitely out of this game. All right, so definitely an interesting risk-reward ratio. We're trading inside ranges, so don't be too aggressive. Obviously, always the same risk limitation in a range. All right, it's what we call speculative trading. All right. So speculative trading, never more than 3% risk, all right? Which means the stop loss, no matter where you trade, never is going to be more than 3%. If you do this, you're stupid, because that's not how it goes. In ranges, what you do is that you make some easy cash to forecast potential trends to come later, and you risk manage. That's all we do. We're just trying to pick up some easy money. All right, so please respect the rules. Just trade in those areas, manage your risk. Remember that highlighting the area doesn't say we're going to trade the area. We trade the area if we got a fucking context, if we got a signal and stuff like that. Remember that these are the 15 minutes area that we're going to trade, so you should favor 15-minute signals today. Those who are more experienced and want to be a little bit more aggressive can go down to 3-minute chart time frame only if they have a context. Remember that you always trade a context. You know the context, the trends, the range. So make sure you can answer that question, then answer the maturity, and then you risk manage. Remember that this is the PDF manual. You always need to have this close to your screen, so just making sure that you respect the strategies, behaviors, decision-making process, and the rules before you press any button. If you do this, then once again, it may take a few weeks for you to process all those informations, but normally a few days, a few weeks from now, you won't even have a look at the PDF manual and this decision-making process. It will become natural to you, and you just have learned the lesson. And at that moment, you'll have learned the hard way, the hardest lesson in trading, how the fuck risk management works. And just getting this is going to make you a much better trader than you were before. Still, you'll have to work out psychology, and it takes way longer than that. But still, at that moment, you'll be dipping a toe into the actual trading world, aside from the previous probably gambler state that most of you were into, like everyone else. I mean, when we begin, we're all gamblers, and then we start to rise from ashes. All right, so anyway, enough for today. I'm going to stick to these 20-minute shows. That's what I want, short ones for the intraday topics. So I'll see you guys tomorrow, in which we're going to take care about the alert system. That's a question you guys are really recently asking a lot. So we're going to make a dedicated session about that. I'm going to show you the code, how it triggers, what it triggers, upon the different alert system. Remember, these are the context alerts I've been setting in motion in Hewitt framework. So I'm going to explain all of these, what elements will trigger them, how it works, how to actually profit from them, and stuff like that. So that's the topic for tomorrow. It's going to be a long show. It's probably going to be 1 hour long because there's a lot to talk about. All right, bye guys. See you tomorrow.